Good, af- good afternoon, everyone, and welcome to another webinar Insights from Nukoud. My name is Anthony Sassine, and I'm the CEO of Nukoud, also CEO of OCEANE Invest, an ETF market maker based out of Abu Dhabi. Thank you all for joining us today. Whether you're an investor or an asset manager or financial advisor or a retail investor or simply interested in the evolution of ETFs in our region, we are delighted to have you with us. Today's session is particularly exciting. One, because we are joined by Sherif Salem, one of the pioneers of the ETF industry in the GCC. Over the years, Sherif has played an important role in shaping the region's ETF landscape, working across product development, index innovation, and market growth. His experience gives us a unique perspective on where the industry has come from, where it stands today, and where it's headed. So during our discussion, we'll explore with Sherif his journey in the ETF industry, the evolution of the ETF industry across the GCC, especially in the UAE, the opportunities and challenges that lie ahead, and what will it take for the region to build a more vibrant ETF ecosystem comparable to the world's leading markets. We're also going to take a closer look at the region's newest ETF launch, the Lunate Chimera Selective GCC Shariah Dividend ETF. We'll discuss the thinking behind it, behind the fund, how the index was constructed, why dividend investing continues to resonate with investors across the GCC. So, just by way of background, at Nukoud, our mission is to educate investors and support the development of the ETF ecosystem across the GCC by bringing together industry leaders and sharing practical insights. We couldn't think of a better guest to help us continue that mission today. Sherif, thank you for joining us. It's a pleasure to have you with us. We're looking forward to hearing your insights.
Thank you. Thank you for having me, and it's equally a pleasure to be here.
Thank you. So, Sherif, I think when I started first coming to the region in 2021, I was in New York. I was with different asset manager, and you were literally one of my first two or three meetings because we're talking about ETFs in the region. Quick search, discussing with one of the banks who was helping us, and of course, they recommended we have to speak with Sherif Salem, CIO at Chimera back in the days.
Chimera.
Yeah,
Yeah.
yeah, Chimera. Yeah, back in the day, man, you guys had like, I don't know what, four or five ETFs, I think, in 2021. Correct me if I'm wrong. Uh,
Yeah, four. Yeah.
Four, yeah, yeah. It's amazing the growth trajectory that you guys have taken since then. Today, you have more than 20 ETFs, I believe, across the GCC, UAE, thematic, and now the new Sharia compliant fund, which is first in the world, actually GCC equity fund. So, Sharif, tell me why ETFs? What got you into the industry?
Just before I answer that, I just wanted to clarify something or to maybe correct something. Of course, it's an honor that I still remain part of the pioneering group that has brought ETFs, but definitely the pioneer is my direct boss, and he was the first to bring ETFs to the market. Safe. And I've only been handed the baton, so ETFs. I mean, back when I started, that was many years ago. ETFs weren't the thing at the time. It was mutual funds, it was discretionary portfolios. Even at the time, globally, ETFs hadn't been a thing. It only started to catch on in the late 90s and early 2000s. Here, it took obviously a lot more time. And it's only when I learned more about the ETFs, the tool, the uses that it provides, and how much, I dare to say, how much better than a mutual fund it is for an investor. I was never an investor myself in ETFs. Today, all my savings plans are in ETFs because they are really the most cost-effective way to put money and make investments in the stock market, whether it be in equities or fixed income. So really, the journey itself really started I joined Chimera in December 2019, and that's when I started the real work in ETFs.
Where were you before that? And before that, so how did you
Yeah,
start?
so I, yeah, so I started my career at EFJ Hermes in Cairo. I moved to the UAE in 2003. At the time, asset management itself, the stock market itself had only been around for about 3 years. So asset management was still something that was very rare. I did manage to find someone that had a fund, so I joined National Bank of Abu Dhabi at the time. Stayed with them a number of years. Then I moved into Invest AD at one point, where I was. It actually gave me the opportunity to launch frontier markets. So we launched, an Iraq fund, a Libya fund, which was quite interesting, and an Africa fund. Yeah, basically in Chimera in 2019. So all my career has been, and even within EFGRMS, it's always been in asset management. It's been in active asset management, and it's only when I came into Chimera and into the ETFs that I was converted into the passive world.
Passive world. Yeah, that's what we used to call it. Like I
That's
was in
yeah.
mutual I was in mutual funds back in 2000s and 2010, and I always prided myself. I'm like, I'd never do passive ETFs because back in the days it was like, the Vanguards and the BlackRocks, which are amazing products, obviously a
Yeah,
trillion-dollar
yeah,
products, but it was more like S&P 500, 5 bips. It was like the anti-active management, right? Today it's a whole different story. Now you can do whatever you want in ETFs, right? That's
yeah,
why we've
yeah,
seen
yeah.
the growth. It's a whole different world, and it's still opening up. And every day, every month, we hear of a new way to build an ETF,
To
right?
build,
So we went from passive to sector to bonds to thematic and to options based and
mm,
Sharia and now
mm,
they were packaging SpaceX before it even launched.
yeah,
So yeah, yeah, no,
yeah,
it's amazing. So tell us like a little bit about the journey of Chimera into Lunate, especially on the ETF side. How did it start, and to
yeah.
kind of to get here.
So it was seeing really a gap in the market where we realized and Safe realized that the beauty of ETFs and the fact that they were not available here in the market. At the same time, there was a lot of loss of interest in mutual funds. People were more interested in trading the stock market. They wanted the comfort of being able to invest or buy and sell whenever they wanted to. And so there was a gap in the market with regards to ETFs, and as they were taking off everywhere else around the world, the strategy has been to bring ETFs to the UAE and to the market to the region. At the time that we started, there were a number of ETFs. There were, I believe, somewhere in the range of 6 to 7 ETFs listed across in Saudi Arabia and Qatar, and one in Egypt. But there was a lack of diversity in terms of the types of ETFs. So our strategy has been to build out ETFs, and really with the end goal in mind of providing investors with the ability to use these ETFs to create a portfolio. But having been the first to market, we needed to also educate. And we felt that the best way to educate was to use the simple equity long only type of ETFs. We started with the UAE. So there was a bit of, people could associate a little bit when you mentioned companies they were familiar with, because we had to spend a lot of time explaining what an ETF is, how it works, why it's beneficial. So we started off with the UAE, and then we slowly branched out in terms of bringing access to regional markets. So we had Saudi, Kuwait, and then global markets that people were interested in, the US. We brought in, or we then came out with offerings to give access to emerging markets such as China, India, and then once we had the equity part, or once we felt we had a good number of equity ETFs offerings, we then added fixed income. We came up with 3 fixed income, and then more recently the thematic ETFs. Now the focus has also been on the Sharia angle of ETFs, because as you may know, the investors here are more inclined for Sharia investing, and it's something that's actually globally missing from
100%.
in the market. So our focus was also to, or one of the focuses was to concentrate on bringing Sharia compliant ETFs, and we continue to build that.
Yeah, no, look, I have to tell you, you guys have a great lineup now, right? Like from, like you said,
Yeah.
all the building blocks that you need to build a long-term
To
portfolio.
Yeah, exactly. So that was part of the ETFs, and being first to market also gives you, or you have the added responsibility to also create the ecosystem, because as you know, ETFs are different than mutual funds. Mutual fund, you launch it, you sell it, it's over. Whereas ETFs, you're just providing the tools, and then you sort of step out as a fund manager, you manage it, but then the selling and the buying actually happens away from you. And so you need to educate the authorized participants, you need to educate the investors, you need to educate the market makers on how to make use of these ETFs. So that was an added scope to our strategy as well, is to build that ecosystem.
100%. That's what we created Nukoud to help you out a little bit here.
Yeah.
That's the goal here. It's like we
Exactly. Yeah.
definitely need education here. We definitely need more focus on ETFs, especially GCC ETFs. We're having new launches, every month. Interesting stuff. We're seeing like very, very cool stuff launch on the Abu Dhabi Stock Exchange, like quantum, like the luxury ETFs, like we saw the cross listings as well, AI, etc. And then
Yeah.
now the GCC equity ETF.
Yeah, and that's what we hope to bring, is to bring added variety, to enable, and we'll talk about this later, is to enable investors to build their own building block, or to use the ETFs as their own building blocks, because each investor will have a different preference, different risk tolerance, and we're hoping to be able to create the suite of ETFs that will suit multiple investors.
No, 100%. So let's talk a little bit about your recent launch, the GCC Dividend the equity ETF. So technically, I think definitely it's the first GCC equity ETF in the world. I was surprised to see there are no others. And also, what was very cool as well and interesting is the 6.2% expected dividend on that, so
Yeah,
which is a very decent dividend, or it competes with definitely higher than emerging markets dividends, and with the GCC economies like Qatar, Saudi, and UAE. These are solid economies, technically backed by sovereign wealth funds and wealth, right? And then also it actually also competes with like EM debt. If you look at the EM debt, the yield is around also 6%. So tell us about this fund. I know people at your firm, on your team, we're very excited to launch that fund. They've been working on it for Peter and Kauthar and the
yeah.
rest, working on that fund for a long time. And, I'm glad it was able to launch recently.
Yeah, yeah. So the two things you mentioned there are the reason why it took so long to launch. First of all, from in terms of building the product, we had to ensure that it was a yield that was good enough that capital markets felt would sell. And so there was a lot of back and forth between capital markets and our team with regards to how the yield. And so Peter, as you mentioned, did a lot of hard work in terms of working with the index provider in order to come up with the with the parameters for an index that would then deliver that yield, and hence how we came to the 6.2%. The other part is, of course, the background of setting up and dealing or operating in 3 different markets that tend to have some things in common, but not everything. And you have to kind of manage how to deal with each of those individually so that you can deliver the product that is the ETF and what investors expect of the ETF. Settlement-wise, operational-wise, the fact that when investors invest through the primary market, nothing drops, nothing fails, and dealing through 3 different markets, different currencies. Of course, all 3 pegged to the dollar, but different currencies.
Yeah.
You have to convert, different timings of markets. So it's a lot on the operational side, and as I said, it took a while to come up with that 6.2, and I think it's pretty impressive that we've been able to find that. But that's what the fact that we've done GCC allowed us to go out and look across all markets and find the highest paying dividends and not restrict ourselves. Interestingly, our UAE fund, for example, which is not per se dividend focused, but it is paying 4.5%. So we wouldn't, if it was only UAE, we probably couldn't have done any better than an ETF that we already have. And the added layer, of course, that it's Sharia compliant. That was also something that we feel makes the investment more attractive.
You made a switch here, index switch. Traditionally, you were more S&P. I think your first 10, 15 funds were S&P, and now you're going with selective. And Sharia screen is not an easy thing to do, and it can cost if you're not doing it with a big index provider. So tell us about how did that happen?
Yeah. So the indices, are most of our ETFs at the beginning were S&P, but it's not that we are in any way restricted to the type of or the index provider that we use. It just happened to be that we got into a relationship with S&P, and we continue to use their indices. However, when we launched the SHADEX 15, which tracks the ADX top 15 stocks, we used FTSE because ADX is tied up with FTSE, so that is a FTSE index. And then as we progress more and as we diversify the type of ETFs that we're launching, we try or we continue to sort of gauge different ETF or index providers and try to find the best cost-effective solution that will give us the best result for the ETF that we're trying to deliver. So selective, first time we've used it on one of our local ETFs, but we've used selective on one of our thematics, and so we continue to be agnostic to the index provider and really pick them on their ability to deliver the type of index that we want.
Yes. So if you want to talk about like the GCC fund and briefly in 30 seconds to a minute, talking about what is it and what's the composition and how should investor use it? How would you go about that?
It's to put it simply, it's one ETF, one trade, an exposure across 20 of the highest dividend paying stocks, Sharia compliant stocks in the GCC. As I mentioned, not necessarily an investment in an ETF is a standalone investment, but what this does in a building block or a portfolio of ETFs is provide you with the type of income that you would look to complement a more steady, or sorry, a more growth oriented, because these type of stocks, the stocks you're investing in to give you the high dividend, mostly these are well established companies, probably in a mature or close to mature stage. Growth, yes, but in comparison to some of the other companies, things like, the thematics, definitely more mature and more reliable in terms of the dividends that they pay. So this is an added, and not quite as, there is the opportunity or the possibility of capital appreciation as well, versus what we offer through a fixed income where you're getting yields of about 4.5%. Which could also satisfy your income portion of a portfolio. This has the added benefit that it could also appreciate capital.
Yeah, so the ETF is kind of 1/3 or maybe 40% UAE, and then the other two allocations are kind of split between Saudi and Qatar.
Yeah. Yeah, but it is so it is open to the GCC, and this will be continuing. Our indices are either on a quarterly, semi-annually, or annual. This one is on an annual reweighting or not reweighting, but rebalance. And the reason for that is sort of we give the company the chance, because you have companies in there that distribute on a quarterly basis, semi-annual basis, and annual basis. So you don't want to be taking out a company that's only paid half of its dividend and so forth. So, but yeah, it's for now that's the allocation across countries.
So basically, you have a strict screening to make sure, the dividend is there and companies are paying,
Yeah.
And
So
yeah.
yeah. Sorry, just because I just remembered you asked another question about the Sharia part of it,
Yeah.
and with all of the Sharia indices that we manage, there are Sharia boards for each of these index providers. So S&P has one, Selective has one, or has subcontracted with a Sharia. Over and above that, the fund itself uses Dara Sharia, locally based, well-renowned Sharia advisor that also reviews our investments and the investments within the ETFs.
No, it's a very interesting products, and I really encourage listeners to go and check it out. So basically, it has a fee of 50 basis points, benchmarked to the selective GCC Shariah Dividend index. As we said, split between UAE, Qatar, and Saudi. If you want to look at it from a sector perspective, basically materials, consumer discretionary, real estate are your biggest allocation. And the fund is invested in companies like very known companies that we use every day, like Air Arabia, Industries Qatar. So these are like big established companies across the GCC.
Mm-hmm. Yeah, exactly.
Okay, great. So this is, it's another tool for investors to use. We were just talking about the building block concept. This takes me to a topic that I like a lot, and I think this should be at the forefront of investors thinking. It's asset allocation, how to build a portfolio where you can of ETFs, where you can contribute on a monthly basis, on a quarterly basis, and build yourself a nice nest egg, right? And the key to that is definitely diversification, ease of access, liquidity, transparency, which ticks all the boxes that ETFs offer, right? So what's your view on asset allocation, and how can investor use ETFs, especially the Lunate ETFs and the building blocks you've built over the years?
Yeah. So it really goes back to an investor's risk appetite and what their objective is from this portfolio, and their time horizon. So ordinarily, and it's common practice that that if you're younger, your ability to withstand volatility in the markets is higher, obviously, because you have many more years to make up for any sort of losses that you may have. As you get older, you probably want something a bit more secure, a bit more income generating, but it really goes back to the investor and how they are viewing what the purpose of this investment is. So what we've provided is, as I said, the core equity ETFs, which provide access to straight or direct market access. You have the US, the UAE, you have Japan, Germany. You have the thematics, which adds a bit more in terms of volatility, returns. Risk and return are higher. You're potentially going to make a lot more return on something like quantum and AI data power, which is still in its very infancy. But there's going to be a lot of volatility, as people, if you've been following stock markets, will know, these things, stocks within that can go up and down 20, 30%. And then you have the fixed income and GCC high dividend, where you can satisfy the income generating portion of the portfolio. So it's really knowing what you want. The beauty of the ETFs is, whereas before you kind of had to say, or you kind of went, I like the US, but I don't know which stocks to invest in. This one, the ETF gives you the top 30 growth stocks. Japan gives you the top 30 stocks in that market. And you basically, because for a long-term investor, you also don't want to be looking at the short-term gains and losses. Over a 10-year horizon, it's been it's been historically proven that stock markets do provide a positive return, and so the use of the ETFs is for the building block, but how you build that is really up to your risk and return profile. And I encourage people to look into that. I do it personally by putting aside money on a monthly basis that goes in, gets taken out of my bank account, goes in, and yeah, it's definitely better than sitting in cash.
And that's really going to be helpful as well to pension funds. And, we're seeing a lot of pension funds, kind of develop across the UAE, especially in Abu Dhabi. You guys at Lunate, you're building gap benefits, which is end of service benefits, other banks as well. That's going to be, essential and central for them to be able to build these.
Yeah, exactly. It's when you're building, so within something like the end of service benefits, what the government has pushed asset managers here to provide is investment products for employees and employers. And the best way to build those, as you well know, with examples with the likes of Fidelity and Vanguard and all those, they build portfolios with a certain risk appetite. You have the conservative, you have the low risk, you have the high growth, high risk. And the best way to build those portfolios and the most cost-effective ways to build that fund is through ETFs, because with 5 ETFs, within that fund, you can get exposure to thousands of stocks versus having to transact on 200 stocks for that fund. So from a cost perspective, for the end client, for the employer and employee, it's much more cost effective and much easier and faster to build than a regular mutual fund.
Absolutely.
Yeah.
So let me go back a little bit. We have some interesting questions here about the product, right? I know, and about GCC dividend. And let's go back, take a step back, and just answer these question. Basically, one of the question from our listeners, Ahmed here, saying, asking about the Sharia board, which you mentioned, fund has Sharia board, standard fund use the Sharia example, AAOIFI, right? You kind of addressed that question. And the other question for him was, do you purify? The fund does apply purification, and at what percentage?
Yes, the purification ratio. So the purification is done. What we do is the Sharia advisor goes through and goes through the portfolios, and based on data from S&P, comes up with the purification ratios for each of the ETFs. We provide that purification ratio to the investors. We're actually about to publish the purification ratio that we just got from the Sharia advisor, and it's up to the investor to then use that ratio to purify themselves.
Yeah, amazing.
For them to purify
Dude,
the income. Yeah,
that's going to be on your website.
that will be on ADX or ADX and DFM, wherever the fund is listed, and then potentially on the website. But the easiest place to find it will be the ADX. We haven't published it. We should be publishing it hopefully in the next few days.
Okay. And then another question, as the price increase of the stock, right? So naturally your dividend yield is going to drop. Uh, uh, so based on your methodology, do you rank by dividend or how do you assign weights to the different companies?
It's by dividend. It's by dividend yield, and we take. We've with the index provider, they've looked at historical, they've looked at expected going forward, but we don't want, and that's precisely why we don't want. We wanted the annual rebalance and reweighting. Is we don't want to end up being in and out of stocks just because the yields are coming down or the yields are going up based on the performance. Hopefully, that will be reflected in the capital appreciation. The yield of the ETF may go down, but you would have then. What hopefully that means is that you've made money on the capital. And not necessarily that companies have been paying less.
Great. There's one more question here, which I get a lot every day, and I always like to remind people about liquidity of ETFs. So the question is, the person supports ETFs and everything, but he's asking or she's asking if we have an issue with liquidity because when you look at the screen, you see lower volumes or a wider bid and ask spreads, etc. Do you consider this a risk, or how do we see it? So basically, as I mentioned at the beginning of the webinar, I'm also CEO of OCEANE Invest. OCEANE Invest is an ETF market maker that was created almost a year ago to help strengthen the ETF ecosystem. And now we do actually 6 of the Lunate ETFs, including quantum ETF, AI power. We do for the cross listings as well, including KWeb carbon. We do luxury, we do US value, US growth, etc. So liquidity is our thing. It's basically the prices you see on the screen. These are prices by Lunate, OCEANE Invest, and by other market makers that are covering these ETFs. And the liquidity of the ETF itself really depends on the underlying, right? So whatever you see on the screen in terms of volume or in terms of offerings, this is not related really to the liquidity of the ETF. The liquidity of ETF is not impacted. You can buy as much as you want at the spread as as the market maker is posting, but as long as the underlying of the ETF stocks are liquid, then you have no issues. You can buy 5,000, 50,000, or 500,000, or even 5 million dirhams, and you still get your order filled at the spread you see on the screen. So this is a misconception that investors have. If there's low volume, that means no liquidity. That's not true because there's always a market maker in the background and the ETF is not going to get impacted as long as the underlying stocks that the ETF is investing in are liquid. So, okay, yeah, go ahead.
Yeah, no, yeah, that's perfect. Additionally, yeah, no, it is a misconception. I agree, and that's the beauty of the ETFs that a lot of people don't know about is that there are two ways to buy it and sell it. You have the secondary market, which is what you see on the screen, and a lot of people look at the screen and say, yeah, but it's not liquid. And you have the primary where APs are involved, where they can actually buy from you and then go in and deal with the buying and selling themselves. Or if it's a huge quantity that you want to buy and you're seeing that there's only a little amount that's being offered, again, the AP can be involved in trying to in creating those ETF units for you. And it's not specifically just the secondary market that you have to rely on.
Exactly. So this is how ETFs were created, and this is why ETFs are actually have taken off, and they're being used everywhere because of the ease of access, because of the structure of the primary and secondary markets, and this is why we're seeing now ETFs at 22 trillion globally. So, Sharif, one thing to note here, I don't know if a lot of people know this, but I have a question for you. Who's the biggest asset manager issuer of Shariah compliant funds in the world?
In AUMs, in
No,
number of products, it's
number of
Lunate.
ETFs. You.
It is Lunate. Yeah, it is Lunate. We currently have 11 ETFs. We're by far the biggest in terms of number of ETFs. We're by far the biggest in terms of single country ETFs, Sharia compliant ETFs. So we have 7. And we're the only ones to have non-domestic Sharia ETFs for Saudi Arabia, Turkey, and I believe India. So what that means is basically if you're in Turkey, there are listed Turkish Sharia ETFs, but you will not find them anywhere outside Turkey. So we're the only ones that provide those 3 outside their home markets. What I need to also mention, I assume a lot of the people watching here are UAE based. And the one important thing to note about the benefit of having all these ETFs here in the UAE is the fact that you buy them in dirhams. You don't have to worry about, you could be buying the US, Germany, Pakistan, as well as the GCC. You would have had to deal with 6 different currencies. You don't have to do that. It's dirhams. You buy them here in AED. And you have access to those markets immediately. So that's an added benefit of why, because some people will say, why are you listing them here when I can buy them? Yeah, but you're going to have to transfer those dollars or transfer whatever currency that is. So that's the added benefit of having these ETFs here and on market and trading within your day. Versus having to stay up late to trade the US market, or having to stay up late or get up early to trade Japan market.
Oh, I have very strong views on this. Actually, we built 2 companies based on this. Nukoud and OCEANE. It just doesn't make sense for the GCC, which is like one of the biggest pools of capitals in the world and most vibrant middle class and professionals, affluent investors. That we only have 43, and you guys have done an amazing job doing more than half of these. So
Yeah.
basically, there's more than just currency conversion. By the way, currency conversion is, people think it's pegged. There's no cost there, but the cost is actually massive. Like, look at your bank.
Yeah.
It's
Yeah.
the
Yeah.
big cost there. In addition to that, there's taxes involved, right? So basically,
Mm.
if you want to buy an income fund in the US or in Europe, you're paying 30%, 15% on the dividend. Here, you're paying 0, right? So
Yep.
that's
Yep.
basically, if you buy an EM fund, okay, that has a 6% yield dividend in the US or in Europe, that's minus 30% or minus 50% of that 6% you get per year. Here you get the full.
Yeah.
Also, there's estate tax involved, which a lot of people don't know. Basically, in the US, if you're investing in the US and something, God forbid, happens to you, there's a 40% estate tax if you own more than $60,000 for that ETF.
Mm.
Into other things, you have to wake up, stay till 6 p.m. to do it. You can just trade it now, and in dirham and in your local time zone. So definitely, this is a big area of growth, in my opinion. Going back to Sharia compliance, yeah, also this is for me, it's a big area of growth. So we recently published on Nukoud a deep dive on Sharia. We cover Sharia compliant ETFs globally extensively. We've published 4 or 5 different reports on Sharia funds. One is the full comprehensive universe globally, and I think we have between 80 to 82 funds. You have 11 of that, so that
Mm.
funds. And then you only have like 64 billion in assets versus 23 trillion for the whole, for the whole ETF universe. There's a huge gap, right? And I think it's a big opportunity there. Where do you see like the next opportunities in the Sharia for you, at least, whatever you can disclose? You've done dividend, you've done country. Do you think about thematic or other different asset classes that you can do in Korea?
Yeah, look, I mean, we're just scratching the surface in terms of not just us, but in terms of the ETFs here in the region. You only have to look at, and you mentioned it earlier, you only have to look at globally how ETFs have evolved, and you're getting more types of thematics, factorial, sector, all those types of ETFs that are coming to market. The beauty of ETFs is once you've built one and you've built the foundation, it's very easy to then bolt on a number of them. The only thing that takes time is market, maybe setting up operationally, but also coming up with the idea maybe takes time. But once you've done it, it's easy and it's quick to market. So I think there's still a lot of opportunities out there, a lot of ideas we have. We probably don't have the number of hours or the number of people needed to come up with, to actually bring to life all the ideas we have, but they will come eventually. Yeah, I mean, 5 years, maybe going on 6 years now, 25 ETFs is and the year's still not over. So 25 ETFs in that period has been a lot of hard work, but hopefully starting to pay off, and it is starting to pay off a little bit. And but we're yet to see that J curve, I think, but hopefully
Yeah.
soon. Yeah.
Yeah. So, and what do you think it's going to take to see that J curve, and especially, we see good adoption in the retail space, like
Yeah.
participation there, but we're not seeing the institutional yet, join. What do you think it's going to take from an ETF industry perspective, to get things going and get the institutional folks in the door
Yeah.
here?
Yeah. Look, I think yeah, we haven't talked about institutional a lot, but they are key. We've looked at a number of emerging markets, and how ETFs there have taken off. Korea, India, a number of those markets, and a lot of it is regulatory. So a lot of it has been mandating, institutions mandating, sovereigns mandate to invest inside the country, within the country. South Africa, I think, was another one where they started off with small amounts. 2% has to be invested within, because the fact is a lot of these big institutions do invest abroad. But as we bring more of these types of products that are available abroad but are here available locally, with just the same type of structure and the same type of regulatory oversight, and the same type of transparency, there shouldn't be a reason for institutions not to look at these. And really, it's going to become, just to answer that question, basically, it's going to become regulatory when people, because as you said, and I think even some institutions are starting to understand ETFs. We've seen a pickup. We were talking to you offline that when we started, our ETFs were trading, a handful of times during the 6 months. Today, we're having, on a monthly basis, we're trading over 100 million dirhams across the 25 ETFs. Just as recently, actually, I was looking at the numbers just as recently as last July, so July of 25, we were trading less than 20 million across, at the time, probably across 2019 ETFs. So there has been definitely a pickup. It's on the back of building and widening that ecosystem. Nukoud, OCEANE, our tie-up with WEO Bank, where people are able to put in monthly investments. So things are picking up slowly, so slowly but surely.
Right. Yeah, we need you to keep launching these funds.
Yeah.
So we have a couple more questions here. Can you elaborate more on the AP on the primary market for ETFs?
Do you want to do
And
that?
AP?
You're the expert. You're the.
Sure. So basically, look, the ETFs, the way they're built, there's you have the primary market, and then you have the secondary market, which you see on the screen. The primary market is working with authorized participants. That's what AP is. It's authorized participants. And Lunate, I think you guys have seven different authorized participants,
12.
including how
12.
many?
12.
12? Where did you get 12? Including OCEANE. Sorry, I missed it by half.
APs and market makers together, yeah, we're 12.
Yeah, for the AP, so the
Yeah,
AP is the ability to create ETF units, basically package them or redeem them.
Oh,
So
cool.
ETF, sorry, you were saying something?
No, sorry, it was 12 APs. I was just making sure, because it is 12 APs. We do have 12 APs.
Yes. So that's a lot. That's great. So
Yeah,
basically,
yeah.
so an authorized participant is a large financial institution, that has a special agreement with Lunate issuer to create and redeem ETF shares. So basically, ETF shares are baskets of stocks, right? And these APs, they play a vital role in supplying the market with ETF units when needed, or taking away ETF units when they're not needed. This is how the demand and supply expand. So basically, an AP can do a large block trade of shares called the creation unit directly with the fund issuers using cash or the underlying securities. And these trades usually happen at NAV, so basically, or a little bit above NAV. So basically, you can get a really good price in terms of your trade when you're dealing with an AP. Or the other way to do it is you can buy it on screen, and what you see on screen is a spread between the bid and ask, and that's a market maker behind that, like OCEANE, and pricing these ETFs, and this is how you can get access through the secondary market as well. So you have two ways of doing this, and allows for arbitrage as well, to keep the ETFs tight, especially with the underlying basket, and keeps the liquidity flowing and the discovery of price ongoing on a continuously. So also, what else? So where do you like? So basically, when you guys started with the fees, you're at a higher level, and now I see you're cutting some funds. Where do you think like ETF fees should be here? Because naturally it's going to be higher than what you see in the US because of all the different hurdles that you have to deal with on to build that across different markets, different currencies, etc. So what's your view on fees and where are we heading?
Yeah, exactly. I mean, the fees, for anyone that doesn't know, ETFs are very low margin business. And someone probably, looking at our fees on some of the funds where we have 1% might be amazed at that. But it's not only the hurdles that you have to go through in terms of setting these up, but it's also a reflection of the costs of the service providers. So in building these ETFs, we wanted to make sure that they are world class in terms of the service providers that we have. So our custodian and administrator, BNY Mellon, which is one of the biggest in the world, but with all that, there are costs, and the costs for these global players in the Middle East is not the same cost, or is not the same as they would in Europe or the US. So as we build out more, as we add more volume, or as we add more AUM, because as I said, it's a low margin, so you want higher AUMs in order to compensate, to compensate for that. We'll look at reducing these fees, and as you mentioned, we've already reduced some. Some of the products we came out with are competitive globally. So our fixed income products are all at 40 basis points, which is competitive globally. It's at global comparison. Our thematics at 49. Our UAE Sharia compares. We're only one of two, so we have the same fees that iShares charges. And part of it is also the fact that some of these products are unique, and they take a lot to build. But yeah, as with anything, and as we've seen in many markets, and I've seen with mutual funds myself, is with time these fees do go down.
Okay, amazing. This was really great conversation, Sherif. Told there is a lightning round here that I have to do, and feel free to answer or not answer. So just gonna ask you a few questions, personal, not personal, and then just for the listeners to learn more about you. So how old are you?
Oh my God, that was it.
No
I
answer.
was I'm 53.
53. There you go. How many kids?
Two.
Where was your last vacation?
Sardinia.
Whoa, interesting. How many ETFs do you think you were going to launch in the next year? It's going to launch in the UAE.
Launching. I hope there's more of us launching ETFs.
What's the,
Huh?
what's the
Well,
number? Hey,
no idea. I mean, we've launched
there's
anywhere
you and
between
other.
we've launched anywhere between 2 and as much as 6 ETFs. It really depends on regulatory and operational, and we'll see. But
No
definitely
prediction.
no prediction.
No.
Yeah, no prediction.
Okay, good. Thank you. No, appreciate your presence here and having that conversation. You really was one of the you're one of the very early adopters of ETFs in the region with Safe and the Lunate team. And we appreciate the collaboration and the continuous conversation with Nukoud and OCEANE and the work we try to do on a daily basis on the screen to provide good spreads for investors. So basically, yeah, if you want more information about ETFs, we write a lot about the Lunate funds as well. Please visit nukoud.com. There's a lot of great articles and tools there on ETFs. And if you want more information about the new GCC ETF, either visit the ADX website or Lunate's website. And thank you all for joining us today, and look forward to seeing you again on a new webinar in the near future. Sherif, thank you so much again, and have a
Thank you.
good day.
Thank you. Pleasure. Thanks.